All right. So bit of a crazy week. So I had two break evens this week, and then like I said a couple minutes ago, I kind of had to sit back and reevaluate a couple of things because, um, for example, we all know what happened this week with euro and with dollar, etc. And you guys know what our bias has been for the big, I guess, for the past couple of months now. And the issue now is considering the fact that we've still given this medium term bullish narrative, or we've kind of wanted that bullish narrative to continue. There have been signs that kind of tell us otherwise, and I've kind of noticed that I've kind of just been brushing them off. And once I saw, which I think Wednesday's big move, Thursday's big move, Wednesday, yeah, Wednesday's big move. Once I saw Wednesday's big move, I kind of realized, I'm like, yo, like does not make sense to buy in any type of way, and that means EUGU. That means no type of sell makes sense as of as of that Wednesday. Right? Obviously, things can change, um, but I kind of had to sit back and reevaluate, and I'm gonna come back to that point because I do want to get into the positions that I took, because at the time the plan was going as we wanted it to, right? As we said last week, even the past like 2 weeks, right? We've wanted the sweep of this very important swing low into the swing high. We wanted that sweep to come into play, which would then create a narrative that we would have an internal sweep as well. Now we would just need the internal to kind of align, have some type of disruption, right? That would then align with this sweep, which would then align with the external sweep, right? That was the plan, and it was going according to plan, right? Especially if we start to zoom in a bit here, right? Once you start to see these reactions, or we saw the reaction from the sweep, right? And then we start to see internal structure be formed, right? And then we kind of started to see potentially a failure. So it's kind of now or never. And if we look at, let's say, hold on one second. Sorry, I had to close my door really quick. So like I said, this is kind of the make it or break it point. But if we look at price, right, especially during my two executions here, right, EU and GU, I kind of took the same scenario at the same time, and this was, I believe, to start the London session, right, or probably deep in the oh yeah ish, right here. So looking at an Asia sweep, we have the impulsive move, but however, this is still right technically bullish. So if we're technically bullish, then the internal has to kind of disrupt if I want to assume that we're going to continue lower, right? And so considering this is still bullish, we have an internal bearish range. So because we have an internal bearish range, then my scenario here is that I have an internal sweep, right? And the internal sweep leads to some type of decent momentum coming down. But because it came semi-strong back into the upside, it wasn't the clearest move until I then saw this engulfing here. And we're going to go into price really quick to see that engulfing. Let's go here. M15. I believe it was M10. Let me see. Maybe EU. No, okay, so no engulfing. Okay, that was my mistake. But the consensus here was I was kind of using this M5 engulfing. Okay, here it is. My bad. Here it is. This is the engulfing that I'm speaking of here. So my position now was based on the engulfing here, although it was uncertain of the momentum going up, and it was kind of showing signs that it wanted to go down, considering we were talking about the sweep here, which this is the sweep of the Asia high that we're talking about, right? Considering there is still bullish momentum, low high, then I'm kind of relying on the engulfing and second engulfing, right, to then provide for me this entry. And I believe my entry was based on the M10 inefficiency. Yeah, M10 inefficiency here. So like a small inefficiency here. And like I said, you guys know that I want to make sure that I get in the trade and I don't kind of over refine, because if I was to over refine, obviously it would be something like this. But no, I relied on the M10 inefficiency fill, and my target was obviously gonna be coming into these lows here, right? This is like TP1 here, because the the snowball effect here would be that if we are to break this with substantial momentum, then I can then hold into the deeper targets. But unless I get that reaction to the downside, then I can't really justify that. You know what I mean? So my TP1 would have been here, and that's already, 1 to 5-ish. So because that was the case, right, I'm looking to see how this plays out after that. So what happened here, we didn't see the internal reaction, we didn't see a bearish leg move, and that was enough for me to move my stop, right? And so once I moved my stop, then that obviously hit my break even, and then it ended up going the opposite direction, right? And so although this was a break even, the trade was technically valid. But this is, I'm going to come back to what I said earlier with, if we look at the daily here, right, the day that we've been talking about, right, this is where I kind of want to force, or like I talked to Lex about it. He said it was imposing your will. That's kind of how he put it. He said that you're kind of imposing your will, and you're kind of you're wanting something to move based on how you want it to move, and you're not necessarily focused on what's actually on the chart. And one of our big standing rules is like, if you have a reaction before the POI, right, then you have to assume that that POI is probably not going to react, and then you're going to get, obviously the external leg be the target, right? But that completely goes against the overall bias that we've been talking about. But I don't want to get caught up with this overall bias just to be right, whereas really I should just be paying attention to what's going on and let that kind of play out. You know what I mean? Is it technically still right to then play based on what's actually here? Yes, but what I mean by not trying to focus on just being right is like trying to be right on all scales and trying to have one bias and kind of just be glued to that bias, right? We have to remain dynamic, right? Because although this may be bearish, this may be bullish, and because this is bullish, it may disrupt why your sales cannot work out, right? And that's, I think, very important. A very important lesson to kind of just continue to reiterate to yourself, because you will get caught up in these scenarios, kind of like how I'm just gotten caught up with this, where I miss out on a very big bullish move because I'm so obsessed with wanting to be right with the overall general bias. Whereas in reality, right, I don't need to be completely right to make money internally. You know what I mean? I just have to follow the models. Well, first read the models and then play the models, right? And so going to then my GU trade here, right? Similar scenario, but I personally liked GU a little bit more. Besides the fact of one thing, and this goes back into the case study that we talked about the other day. My sell is here, right? And so at first, I didn't have this sweep here. This was afterwards. But I was looking at potentially a reversal sweep here. Actually, I'm just gonna remove that. So bearish structure, potential sweep, but more importantly, this was kind of the main reason why I was even leaning towards this bias, is the fact that we swept this very important high. And therefore, if we were to get the reaction here, right, it's some type of important reaction, then we could then set up for a bearish sweep. But like I said, that's just me trying to impose my will based on my DXY bias, because if you guys recall, in the recent case study, we talked about this, where we were looking at this to be a completion of the sweep. So it just makes more sense for this to reach these highs because of the bullish sweep that's in play. And this is currently in play, and it just created technically a new internal high. And that's the contradiction with a sweep, because a sweep, although we require a sweep, right, to then have a transition to then go lower, at the end of the day, a sweep is still also a bullish break of structure. That's what needs the alignment. And without the alignment, you can't play the sweep. So if we're looking at this now from the overall POV and based on what we talked about before, it just makes more sense to pursue the high. And because if you pursue the high, then obviously then the sweep would be completed. But for me to go against that is, technically not correct, because my entry is here, as you guys can see. Wrong one, sorry. Right, my entry is here. And if you zoom in, go to M5. Right, similar to EU, dual engulfing, right, where we see this engulfing, and then we see this engulfing. So my entry was pretty much just here based on the engulfing, and I'm obviously aiming for the lows. We start to see internal ranges be fulfilled, but my break even wasn't hit. All right, and this is why I do like the rule with allowing the new range to create itself before moving my break even, because as you can see, that's the point of the invalidation. If the invalidation is hit, then technically it should go the opposite direction. So my entry criteria and my management is correct, but how I'm looking at this from the alignment POV is incorrect, because I'm disregarding what's actually on the chart, and I'm more so trying to fit in what I have kind of been saying for the past couple of weeks. You know what I mean? And although it didn't burn me, it is disappointing because you kind of miss out on some really, really good moves that do technically make sense, right? And let's see now. Where this is at now is the target that we talked about. You know what I mean? And it's only now until you see these highs be swept that you start to see some type of reaction, right? Which is, that's crazy, but it's what it is. Um, but yeah, do you have any questions, concerns with what I mean by not imposing your will and just trading what's on the chart, not what you want to see in the chart? Does that make sense? Excuse me.
Yes, and it's also sometimes the problem that I have.
Mm-hmm.
Like sometimes you are expecting something on the trade that doesn't happen, and you continue in that direction until you kind of get burned.
Mm-hmm.
And it's kind of the mistake that I often do. Like this has to go down, and you're keeping looking for every chance of getting inside on the favorite direction. Maybe in that case, instead was like the opposite. I don't know if it makes sense.
Yeah, and the thing is, you could be right. You technically could be right at the same time, and it sucks because this is a byproduct of fractals, because you could be right. Like look, people are saying, let's look at this from a hindsight perspective. This is why I hate hindsight. Um, okay, let's say here. Oh, like I should have bought here. Like, duh, obviously you should have bought here. But the thing is that if you're gonna buy here and you're gonna follow your rules to the T, you're probably gonna buy here. You're probably gonna buy here. You're probably gonna buy here, right? Or maybe here, right? And so the thing is that could be right, but there's just a lack of misalignment with the bigger picture. You know what I'm saying? So you could say that, hey, I was wanting to be bearish here because of the engulfing and potentially a sweep and whatever. Maybe there's like divergence or something, but this is right because the rule is technically there, but the alignment is not there. So I think the solution is how you align, whether it's by time frame, whether it's by level, etc. And I mean, if you guys want like a framework, I mean, let's say if you guys want like just time frames to try to align that kind of go against the solidified points, but you can probably try to align it that way too. Is like H4, M15, right? H1, M5, daily, H1, right? If these are, I wrote that so ugly, guys, my bad. H4, M15. I like these combinations because of the division between them, right? And then if you go to like the daily, H1, and then the H1, M5. And I don't mean like I just mean by structure wise. Like if we're on H1 right now, let's just say the H1 structure here is bullish. Then maybe the M5 can give me a good amount of candles to where if I see a disruption, if I see a transition, then maybe it'll make sense to transition. So let's say, like, let's not go to M5. Right? If this is to, let's say, sweep, do something like that, okay, maybe it makes sense to go down. Right? So I think it's all an alignment issue, right? And obviously, from a psychological perspective, it could be like an ego thing too, right? But if we're looking at just the chart itself, I think the issue is that it's an alignment issue, right? What you're aligning isn't necessarily the best combination, but then the best combination, there really isn't one, right? You kind of have to figure that out. Yeah, I hope that makes sense. The ABC framework? You mean in terms of like order flow completion? Like you mean like the
Yeah,
ABCs, like the
develop my
ABC?
patience. Yeah,
Yeah, kind of
definitely.
just
For
yeah.
sweet.
Yeah, I mean the rule is pretty simple. It's like if you have a range and then you have a solidified point, then if that solidified point does not break the slow, then it has to go for the high. And if it breaks the low, then you're probably looking for a pullback and a continuation. Or then unless it's like a sweep. So it's just positioning on there. But yeah, I see what you're saying. Mm. But yeah, I guess that's like the lesson for today is like try not to impose your will and try to just be dynamic. And by dynamic, it just means be open to both perspectives because you could probably argue both perspectives on like every single trade. Then it's just figuring out what to align to get yourself a winning scenario. But I think that's something I definitely want to work on with the with that new workshop because I'm actually going to take a little bit more time in setting it all up because there's a lot of different ways I can go about it. But yeah, any questions, concerns on the trades? Any questions, concerns on price itself now? Because we're kind of now at a very interesting spot here. For example, if you look at the weekly now, that's a scary weekly candle. It's a very scary weekly candle. Why? Because if we close here, then I don't know. Like this is bad. Like there's a big divergence here between EU. Let me see if I have my indicator on. I don't know if it'll pick it up, but let's see if there's something on dollar. No, I guess I didn't catch any of it. I guess this would be like a 512. Oh, that's why, because it cuts price. Okay, that makes sense. Never mind. Yeah, never mind on that. But here's the thing. It looks like it's kind of escaping us here. It's a bit complicated. And so now I don't really want to fight this momentum unless we get like a transition. And that transition would require like this or this, right? Because then if this comes in with momentum, then I can justify like this being like a false flag. But as of now, like I don't really want to fight this. But yeah, see, and also like it sucks because now, obviously in hindsight, right? Obviously, you can see that there's like a sweep here, and then there's a potential continuation of the sweep, right? I can't just necessarily see this as a reversal because there's not really anything supporting that now, you know, especially because of this. But yeah, any questions, concerns? I don't have much to talk about this week. It was pretty slow up until like Wednesday. And now I don't even have a bias now. Like you can argue like you remember this POI is finally hitting, right? But I don't know if this will be enough. Like I would need to see, like I said, something like that, and then maybe another transition here to justify any type of move up. Yeah, if it's going to get bullish, right? But obviously, if we start to recover, then I think I would lean more towards the downside. Yeah, it makes total sense. Also, interesting one is Bitcoin. All right, it's another interesting one. Excuse me. Right, so me and my friend were talking about this, right? Because I had a friend that was always telling me, "Oh, buy this, buy this, buy this, buy this." And I'm like, no, like it doesn't make sense to you yet, right? And even now, it's finally starting to make sense too. Why? Because here's the thing, right? This is another alignment thing. When you're looking at POIs, like look at this time frame. Excuse me. Right? This is a 3-month scenario. Right? So therefore, I'm not gonna go to the daily, you know, and try to buy after every single scenario. You know what I mean? Like yes, it can give me some type of good move, maybe intraday wise, but from the grand scheme, unless I'm like DCAing my way into this move, right? Dollar cost averaging, then I don't think that makes sense. But now it's like a different scenario because like if we're now looking at this, let's say from a weekly, we have had an internal weekly sweep, and now we've had momentum come into play. Because we have momentum come into play, now this is the sign of strength in my eyes. But because up until this point, right? Like let's actually delete this. Up until this point, you cannot argue with me that this is bullish, right? Because of what we talked about weeks ago, right? We were looking at this scenario, but it didn't play out, right? But we were looking at this scenario here. Was it this one? I think so. I think it was something this one, or it might have been this one. I don't recall exactly. But even still, like if it was this first one, this reaction, broke structure, that would have been a partial, then that kind of invalidates it, right? And then even if it was this one, there's no true reaction ever. So then that invalidates it. But that doesn't mean that I'm bullish now. That just means that I'm not bearish, right? If a bearish move is invalidated, then that means I'm not bearish. But that doesn't mean that I'm bullish, right? I would need to transition to the bullish side to then be bullish, right? And it's only until after I see this start to play out, now I start to see some sign of life. You know what I mean? Because now this momentum can mean a couple of things, right? Like if we start to recover a bit, then any type of transition gives me TP1, TP2, TP3, TP4, right? But if we start to see recovery sweep, transition, okay, this is now a completely different situation because now I'm now aligned with this again. Right, because consider this is still bearish technically, like this internal leg. The internal leg's still bearish. If we go from the start of the leg, we have high, low, high, low, high, low. So if we were to break this, that's a CBOS of the whole leg. That means that we're now in the pullback stages of this whole leg. Even though this is still fully bullish, right? The only way to align with this bearish leg is if we have like an internal transition here. And then that would be bearish. But then if we were to, let's say, have a bullish move, have a recovery, then have a bullish transition. Okay, cool. Now I'm bullish. But I cannot assume these scenarios until this move happens. So yeah, it's also maybe another thing. Like let's say we wrote down the actual time frames we were talking about. H4, M15. What is that? Like 4 times 4, 16x. Right? Am I correct there? Yes. 4 times 4, 16. 16x dividend or yeah, dividend I guess is like the word. Daily H1, that's a 24 dividend. H1 and 5, that's 5, that's 12. And now let me organize these better actually. Weekly, I think that's H4. What is that? 4 times 6. I'm sorry. 6 times 7, 36, 42, right? Yeah, 42. These are just rough sketches. I'll probably, this is just for you guys to note down. There's potential combinations of time frames that make sense. I'll do, actually, this will be dependent on the month, right? But if we're looking at a monthly to daily, right? The daily, let's say you only trade or the market's only open 5 days a week. That's like a 20x, right? So we'll just say 28 since there's 4 weeks. And then 4 times 7 is 28, right? We'll just leave it there. 3-month. I like 3-month and weekly. 4 times 12. 4 times 12x. So I might edit these, but these are like list of whenever you're looking for alignment, I want you guys to test these out. Tell me guys what you guys think. Right? I might switch these around. Like I might do like the 3-day for or I might do like the H8. I think the H8 might make more sense for the daily. I mean for the weekly, sorry. Because that would make this like a 20 something X 21. Right? 3 times 7. And 21-ish. Right, I'm gonna scan through these. I'm gonna test these out, and this is gonna be part of the new workshop. But you guys can save these. Hope you guys do. You guys understand what I'm trying to do? What I'm trying to say here, though. Think about this from a math perspective, right? The amount of candles that are within a candle. Like in an H1 candle, there's 12 candles of M5, technically. So why H1 M5? Because if I'm, let's say, looking at the direction of this H1, the M5 showing 12x more candles could potentially give me enough candles to then analyze whether we can have a disruption or some type of setup internally, and then I have a clear target. Right? And it's gonna vary by asset, right? Because some assets are 24/7, and then obviously like some assets are like forever bullish, like indices, or like you have crypto, which is just doesn't even have as much data as let's say a gold or as an FX pair. You know what I mean? But this is just kind of like a rough combination. Um, these candles serve to create the structure that we view the models with. No, think about it. Think about it. Oh, did I just lose it? Where is it? Okay, I think I lost it. That's bad. Okay, anyways, no. The point is that because things are fractal in nature, the H1 candle is composed of a lot of candles from smaller time frames. So the point is that you want to see the view, you want to see the view of your trend from a different perspective, right? Because externally, right? Like let's think about this from an abstract POV, like a candle. Let's take it back to the basics, right? Open, high, low, close, right? Open, high. Wait, so this is the let's say it's a bullish candle. Let's say this is a bullish candle, right? Bullish. Right, this is the open, this is the close, this is the high, this is the low. Inside of this candle, let's say this is an H1 candle. The M5, there's many ways that this structure could have played out. It could have been something crazy. Wait, actually, let me do this right. It could have been something like that, right? With the open and the close, and then the wick high and the wick low. And then it could have been, let's say, something crazy like this, right? These are two completely different situations of the H1 candle from, let's say, an M5 perspective. Man, it could be M1 maybe. That's not the point. The point is that the structure that's happening inside of a candle can vary. So if you want to understand, let's say, a sequence of candles, which we would consider to be a trend, then we would want to analyze what's happening internally to then justify, how we're going to play it out. Because playing this and playing this are two very different scenarios. All right, like this could, like for example, scenario 2, I could more so wait for a sweep and then play it down. Whereas scenario 1, I would more so like to see the continuation because I'm focused on the immediate move. And the immediate move here is that the momentum is slower, and the immediate move here is that the momentum is bigger to the upside. Or I mean, I'm sorry, to the downside. And then so now here, if I see this, I would more so take this. But on this one, if I see this, I would need to see the second candle to then justify that. Am I making sense here? Cool. So depending on the scenario that's present, but you can't know the scenario that's present without actually looking into the candle. But then this also is going to help you with, for example, let's say you have an H4 trend and you're trying to take a M5 transition. That's something you see on the M5. Then this may not work out because there's a lot of data in between here. There's a lot of data in between here. So this could misalign this, right? This M5 transition could just be the pullback of the let's say the M15, which would then aligns with the H4. So that would invalidate your M5. But your M5 is a clear model. But you also have to look at the intention of the model. Right? I hope I'm not confusing you guys here, but I think that's a decent little combination. This is recorded, so you guys can come back and see that. I just don't know where I left the. No, oh well, maybe. Yeah, oh well. But yeah, it's gonna be like the main focus of the new of the upcoming workshop, which I'm hoping for like late September. I don't know. It just depends on when I start working on it. Then I'll probably announce it from there. Alrighty. So do you have any case studies, guys? Anything you guys want to review? before we close out for today.
So this one that you just showed is just to get the data of the transitions.
Not
Is
necessarily
that
the.
what you
I mean,
were?
I guess the data, not the data, but for example, like I just said, you don't want to get caught up trying to. Let's say it's the H4, right? The H4 is bullish here. Try not to get caught up on an M5 transition. Trying to sell this, right? But at the same time, if this H4 is very bullish, it may not make sense to buy here, right? If you're looking for a external target like an H4 target.
Okay.
Pretty much it's just to understand fractals. That's the whole point. But I don't know what the sweet spot number is in terms of the division, because you know how I did the division for them. I don't know what the sweet spot is, because that would have to depend on the average distance of a model. Let's find a quick model. Let's say if let's we find a quick something that played out. Let's see. Here. Okay. Let's say talked about this last week, I think. Someone posted this, I think. Here. Reversal scenario, sure, whatever, but it's just for reference. It's this transition was dependent on, let's say, what type of transition, what type of candle, how many candles are in play. Like for example, this would have been a sweep here, and then obviously the internal move there. But I want to figure out what time frames make sense for me to try to find these types of setups. And obviously it depends on how much data you're looking at. And for example, whenever you guys are looking at a time frame, like my how do I say this? Like what I always look at is I like to see my candles like this. I don't know how to explain this, but I don't like, for example, I'm not gonna look at my chart like this, where I can't even see the candle bodies. Right? I'm actually gonna be a little bit more zoomed in. And as long as I have this level of zoom in consistent across all the time frames that I'm looking at, then it makes sense for me right now to use H1 for the scenario and then M5 for my entry. Does that make sense? It falls down to how many candles you want to have present on the chart. And is there a number? I don't have a number. That's the problem. That's the problem that I want to solve is I don't have a number of candles that I want to have present on the chart always. But if we, let's say, go here, see, like if I'm here, then I only have like 200 candles that I'm really focused on. And if I only have 200 candles that I'm focused on, then okay, now if I want to go to M5, I also have to do the same thing. I have to have X amount of candles kind of focused on. And I want to keep that number relatively consistent. I kind of do this innately, but I think it's a pretty good habit to have because there's two pet peeves that I have. It's one when people are trying to trade a time frame like this, when they're looking at it like this, or when they're looking at it like this. I have two, those are like my massive pet peeves. Because how in the world do you know like what's going on? So X and Y axes, keep it consistent. That's kind of what I'm trying to get at here. Keep the X and Y axes consistent. Doesn't matter how much it is, right? It could be more than mine. Like it's already 300 candles. Maybe you could have 350, 400 candles. That's fine, but just keep the amount of candles present at the time consistent, and then go scan through your time frames. And now you will start to build an intuitive view of okay, maybe I'm looking at an H1 move and it's only X amount of candles, then okay, within X amount of candles, I should maybe zoom into M5, M10, M15. Right? And if it's only like a small internal sweep, like let's say something like this, then maybe you'll look into M1, M3. But then you're also going to realize that you're going to need to see the M15, M30 within this region to somehow align this and this. That's kind of what I'm trying to get at here. Hope that makes sense. Right? Is anybody confused on that? I hope nobody's confused on that. You see, this is a good way to look at it. Can you show me the external here too, like your full target? Show me like your external view here. Your chart's a bit messy. You see, this is a good target because of this, right? Especially, for example, this move here is a good target here, and then obviously here, and then obviously here. And then the fact that you swept, had the continuation, and then had the transition here, that means that you can aim for here. And then if you then see this TP, it'd probably be the same thing.
Yeah, sorry about the messiness
Mhm.
as I was scaling because my TP was pretty up there. As I was scaling, it got kind of hard, and even had to erase some drawings. And just try to make it make sense with the continuation break structures. But I added the higher time frame. That's my last one, and on the bottom of the chat.
I think that's this one. Yeah. So this is also what I mean with like alignment. It's like what are you what are you aligning here to get you this trade? There could be two things. It could be the distance or the closure, like the candle closure. Because
I'm
that's an
aligning
engulfing.
the candle closures,
So if you're
and
using
then
a daily
mhm.
engulfing, then it makes sense why you're looking at this from the M15. But if you're looking at it, let's say from the daily direction, then I think M15 might be a little too small. Maybe you could look at H1, like I said, H1, H2. But if you're looking at just the closure itself, okay, then yes, I think that's a good relationship to have, like the daily closure plus the M15 time frame. Right, that division makes sense.
The first entry was actually very tentative, and I missed it while trying to make sure I had everything correct. But by the time I had the second entry and I saw how much momentum we had plus the daily closure, that's when I pulled the second one quite easily.
And it makes sense because you're aligning them. You know, for example, you want to catch. Pretty much what you're trying to do is you see a closure like this, you want to catch these candles. Therefore, it doesn't make sense, like here, to expect a deep pullback. And if you're able to catch that, know that, and play on that, I think that's really good. Just be aware of like pretty much what it is that you're doing and just being confident in it. Kind of what I'm getting at.
Definitely. That's why I said the ABC framework,
Uh-huh.
like I would have got killed multiple times this week, but after reviewing different things, I think the concepts was really what helped me between, I think it was structural disruption and order flow disruption. But order flow disruption, I couldn't really pay attention to until I really started paying attention to how LGCs played into
Let me look at this.
structural disruptions.
Um, Let me zoom in here. Oops. I wanted to see this. This is, I think, important here. This. I think this is important because you see the alignment, you see the engulfing, kind of like an absorption per se, but it's a liquidity grab. You know what I mean? And I think that liquidity grab here, like we say here, that's kind of what's helping you too with fulfilling that bias. So, for example, with that sequence that you have, let's say you have a daily bullish engulfing. If you can relate that daily bullish engulfing to this M15 sweep, I think that's like even your own variation of a model, right? Because this is like a little sweep engulfing here. You know what I mean? And then from there, finding out the target is just kind of either looking at the structure in between, like the structure in between the daily time frame and 15 time frame. Like maybe there's like stuff here, or like we did, like you're doing here, you're aiming for the highs here. And personally, I think you should aim for this high first, because I would hate to see divergence between like AJ, NJ, or something, and then NJ sweeps the high and AJ does not, and you kind of don't hit your full target, but you hit a target. Does that make sense? So I think this is a good
Yes.
target, and then aligning would be really cool here. I think if you could figure that out, that would be really cool. But I like that you're understanding the relationship between the closure and then the time frame that you have to go down to find something that makes sense for it. That's the biggest. I think that's kind of the biggest thing I was trying to explain today. Is how important is whatever it is that you're doing, and how important is that to what you're trying to align it to. So here, what would you? I would consider this as internal sweep. I guess you could say it's a LGC too. That's fine. So as long as you understand that this M15 LGC is in alignment with a daily engulfing candle, I think that itself could be a model in the future. You can make that your own type of variation.
Got it. Thanks.
Because once you understand that proportion, it gets simpler. Like if it's a daily candle M15 closure, then why can't it be like a H4 bullish engulfing and an M1 or something like that? You know what I mean? And then you can use it as a bias as well, where it's like a weekly uh candle and then an H4 sweep. So now you have a bias for the week. You see, but the problem, the thing to solve is like that model, that proportion that makes sense. That's like the hard part to figure out. And then you just scale it from there. I've been looking at gold. But yeah, I hope that makes sense, bro.
Definitely. I have a I'm gonna send in another scenario that got invalidated, but I was able to take partials on it. It was on UJ. It
uh,
was a beautiful sell that like turned around on me, and I'm in a buy for it now. And I know you said you're looking at DXY. I was even looking at EU for because I was bullish on EU the whole week up until probably like this morning, and now I'm seeing sales on it,
mm,
but like minor sales. Like I see a sweep scenario playing out right now personally.
mm-hmm. Yeah, so this one too. I have not been looking at this too much up until Wednesday. Because last week we were wanting to see if this was gonna give us the follow through, but it invalidated. So this invalidating, it completely erases my bias now. Like this is just like Bitcoin where this weekly is very strong. That means that the monthly is gonna be very strong as well. And if it's closing above this candle here, which is kind of like the last push down, then it kind of makes sense as to why for this to kind of come back up for highs. And if dollar's going down, then obviously this is gonna fully rally, and that's good because I think if that is the case, you're probably gonna see a lot of that over the next couple of weeks, where you just kind of see this kind of pullback, transition, buy kind of vibe. Like valid buys here, I think for sure here. I think the buys that made sense here are after this. This is kind of what solidified the bias, and then it's just a matter of finding the scenarios here. This is a turbulence point. Maybe I would have taken it here. Yeah, that's good. Maybe there was like some engulfings here, and you got some M1 continuations. But it's cool because this is just gonna give you a lot of movement, a lot of points. Yeah, I don't look at gold as pips though. I look at gold as points. Metals and commodities kind of look at it from a points perspective, not pips. And like especially if you measure here, see like this is a That's crazy, actually. 1,500 pips since yesterday, actually? You're actually kind of right. Let me see. Yeah, I guess, yeah, you're right. 1,700, technically. But yeah, that would be like 170 points. I like points better on this, yeah. And what's cool too is you can look at this one. Look at the relationship here. This looks like it can really kick off. Because I was looking at bearishes here, but now look at this. You have a sweep. You have a you have a very bullish closure. That's like a hammer. So then if the next candle's bullish, but you're looking at this to moon, and what this chart means is just it means that gold is stronger than silver. Therefore, the buys on gold might be better than the buys on silver. In terms of like the push itself, like proportionally, it might give you a bigger push because now you're looking at, aiming for here. You know what I mean? But yeah, what is silver doing? Let's see. Hmm. I guess there was some decent divergences, yeah. I've also been working on a lot of stuff, guys. I've been working on a lot of indicators. Um, even on a scanner. It's a scanner that someone made, and I kind of made my own version of it. I thought it was pretty cool. I have two scanners I'm trying to work on right now. It's this one. Where is it? Oh, here. It's an ATR based scanner. So you see all of the buys kind of hit TP3, which is really cool. So all I gotta do is add like a bias aspect to it. And it has a 49% win rate. Not bad. And then I have it's kind of like a variation of a sweep. Uses volume and stuff. This one, the win rate is 50%. It's really hard to get these scanners to get above like a 50% win rate. I've kind of realized that. And the biggest problem is like bias alignment, which is crazy, because it's what we talked about today. But yeah, it's something that I'm working on. I want to get those two scanners done like soon. So here's 46%. Okay, I need to fix that. Okay, anyways. Okay, sweep. I think this is a bit early. I like this, but I think it's still early. Like I want to see for an A plus, I want to see something like this. So I have like the perimeter of the buy to sell. Oh, but that's a nice closure. That is a see. This is like a nice. So this is a perfect example of a 3-pin.
Yeah, I wanted to see also the sweep, the one that
Mm-hmm.
you want. But after this engulfing right there, the free pattern,
Yeah,
I was like, okay, I'm
yeah, that's
gonna
good.
jump now because
That's
yeah.
like perfect. That's like perfect. It's like when a perfect doji and then a very good engulfing. The only thing that would have been better is like if it engulfed the previous candle. That would have been perfect.
Yeah.
But no, that's still like it's a very clear move. The other thing you could look at is see if there's like divergence with EU.
I didn't look. No.
Mm,
That high swept the UTAD or previous UTAD.
this one.
Um, that for the yeah for that GU play because
Mm-hmm.
I was looking at that.
That was today, yeah. Mm-hmm. Yeah, that's good. That's good.
Only thing is that I risked upsides because it's Friday plus,
No, that's fine. What was the target? Ah, that's fine. Yeah, you're looking at reversal sweep here.
yeah. I mean, after sweeping the daily and
Mm-hmm.
after having the second sweep, I
Mm-hmm.
was pretty much sure about it.
Mm-hmm. Mm-hmm. Okay, this is a bit hasty. Is there a sweep here? I would need a really good transition on like the internal time frame for this one. Yeah, I would need something very clear internally because it looks like it's not going in your favor. All right, cool. But yeah, like here, I need a convincing engulfing, and then I would like it, you know, because you're very high, right? And what is this CVD? CVD? CVD divergence. I like that.
Yes.
I would really like the like a strong engulfing here. Yeah, I see. I like that it worked out. I like that it worked out. I would have been hesitant with this. Like I think this is
Yeah,
probably no lower now.
I didn't have much trust that it will work out. This morning was kind of a surprise,
Yeah.
but yes.
I mean, it's good
But
that you're
sometimes I
forcing the
see that
continuation. Mm-hmm.
that this one, if you go to see like on M5, it looked like I'm not saying accumulation, but it's really similar because
Mm-hmm.
sometimes the prices make it like so slow and then it's going. Like I don't
Yeah,
know. I have to figure it out better.
I like the momentum trend line. I see that a lot in crypto.
Yeah.
Mm-hmm. Also, is there a sweep here of a higher time frame candle? Like, is this a candle
What?
on higher time frame? Maybe on, let's see. H4. Okay, no, it's a high and a low. H8. Yeah, it's an H8 candle, I think. Maybe. Because it's from 1 a.m. to 5 a.m. So it's like, it's very close to an H4 candle, but it's not an H4 candle. See, like, if this was just one candle and that was engulfing, like it's like an H8 maybe, then okay, maybe you're looking at the sweep of the candle, but I'm trying to see how else this would have made sense for me. Is there a okay, it's aggressive, but it's there. It's aggressive, but it's there, like this. Like at least there's something there, you know what I mean? This is what kicks off the move. And then obviously trail stop. And yeah, none of the trail stops hit.
Yeah. I had a break even also here prior to this one. Uh, I don't remember the entry.
I mean it's valid, bro. It's valid. Like there's a minor sweep and then there is a disruption. Like that's technically enough, even if the momentum is not in your favor.
Yeah, no, but prior to this one, I took a position, but before the sweep, I don't remember
Mm-hmm.
where it was. That gave me this impulse here and took me
Mm-hmm.
break even. I saw the sweep and jumped in
Mm-hmm.
again.
Ah, I see. Mm-hmm. Okay. Okay. Oh, I looked at the wrong one. Sorry. This is the outcome. SL. Um. Yeah, it's just the internal still bullish here. You know, this is still bullish. So like unless it solidifies, sweeps, does this, like that's why I would want then the buy to sell. Because did this work out afterwards or did it fail? No, I think it failed completely. Yeah, I did. And then also, it's like this is a bullish range. This is a bullish range. This is a disruption or LGC. Sorry, LGC. So fail to buy. Yeah. So LGC, bullish range, continuation, and then this is like the perimeter. Actually, I want to see this. Let's see. I want to see something. Gold M10. This was like yesterday, I think. Yeah, I think it was. When was this?
I think it was Monday.
Here. Let me see.
17.
17. Am I tripping here? Here, right? It's here. Yeah, it's here. Yeah, the LGC here. So let me go to this. I want to see something. M5. Also, if anybody's still using the solidified points, if you go smaller time frame, you actually get better output because there's more candles, so there's more structure. More structure. There's more levels. And more levels, it's easier to distinguish. But yeah, this is cool. It's like the LGC. This is like a variant of LGC. It's like a L3 sweep, L4 break. And then that creates the perimeter. And then it's just like you could use the final leg as like the POI. I don't know if you guys are using that, but that's like the easiest way for me to try to figure out these models, figure out the sequences. You know, obviously TP1 is here. But yeah, hit TP1, failed, and then there's like a transition here. Okay, I like that. You can see that there's an engulfing there. That's good. I think this is kind of similar to the sell I took, I think. So did you enter here?
No, still I have to enter.
Okay, you haven't entered yet. Okay.
No.
Okay. Good. Yeah, this is very good. So this is like key here. This. So you see two candles engulfed all of these candles. That's intention. But obviously the problem is the internal still bullish structurally. So there's momentum on your side. So then that's why you require the LGC. Or the LG, sorry. But yeah, this is very good, bro. That's very good.
Yeah, when I saw that LG, I was like, that's it. Because I was kind of, I don't know, like doubting because of this candle right here. This was the
Oh, this?
only,
That would confuse me there. That.
yeah.
Yeah, this one, I think I forgot who I talked to about that. I don't know if we talked about this on Zoom. No, we haven't. This is this week. Because if we're looking at this, like if you want to zoom in and be very like methodical about this, it's like this is a bullish LGC technically, but then it fails again. So this is a failure of a failure, and that failure of the failure aligns with this and this. But yeah, now the only tricky part is like the entry. It's like, do you use this or do you refine? You know what I mean? But either way, this is good. Like, this is very good. Just remember that this is key, and then obviously that's key. But more importantly, this is very key.
And you see, I wanted to tell you this one. Sometimes I have this trade like so, no? Like they look perfect,
Yeah.
but then they don't play out as I want, and I keep you know trading them because I'm like, I don't know, maybe it's ego problem, but I'm like, this has to mean something. You know what I mean? Like,
Sure. But the thing is like not every model serves the purpose of a reversal. Some models are just meant to give you the pullback. Like try to see how many times that happens, where you have a good model and then it reverses on you, or it's only like a pullback. Let's see, maybe I could find one. Um, see, like this is not bad. This is not bad. It's a reversal, yeah, sure, but it's not bad. Right here, where you have, let's assume there's like a higher time frame sweep, but then there's high momentum, engulfing, internal transition, right? And then you have the LGC, and then you have the reaction, but you don't have the follow through, because the purpose of this model was just to give you the pullback. That's why alignment is a problem. That's like the biggest problem to solve, I think, is alignment. Because it doesn't matter what you're trading. It could be any type of system, any type of model. But how do you align the time frames to correlate with the bias that you're wanting to trade? You see? Because you will get like this. It's kind of what you mean. You get a reaction and then it fails.
yeah, it kind of fails, but then it gives you still sign that you were right.
Yeah, let me see if I can find a good one.
And you are there stuck, like in the
Yeah.
trade.
Yeah, like for
Because when
example,
you have like a
uh-huh.
sweep, then you have internal transition, and this means something, no? But
Mm-hmm.
then it doesn't follow through. And you're like, and I'm like, it has to work because this one has happened
It happens a
and I'm
lot on
stuck in
M1.
that
It
cycle.
happens a lot on M1, right?
Yeah, it happens more
Yeah, it
often.
happens a lot in M1. I know what you're talking about. Like here. I guess you could say my trade was like that. Like the scenario I took. I think I don't know if it was here, but so let's say here you have a very good transition. You have a sweep. You have this, right? And then let's say you trade this, and then you trade this, and you want to aim for the lows. Good. This is good. You know, it's a good setup.
Yeah, it's perfect.
Yeah, but the alignment problem is now there, where this one did not hit target, but it went away, and that is, let's just say here, it's up to here, and that is because if you zoom out, the H1 is not never been bearish. You see what I mean? It's alignment.
Yeah.
So the setup could be right. It's just the setup could be misaligned, or it may just serve a different purpose, right? But I don't, maybe serving a different purpose isn't a good way to look at it, because not necessarily every move needs to have a purpose, but in the end, it's all cause and effect. So yes, this could be a good setup, but if it's not aligned in every other way, especially here, like a caution sign is like this. You know what I mean? That's a caution sign. The fact that we barely swept here, which means that the bias to the downside is still intact, but you may not be as confident. But you can be confident based on this setup. But then obviously the counter is like, let's say this was to sweep, and then you have that. That's why you have the trailing rule, because if this creates a new range, then you can move your stop, because that's what happened. Almost. It didn't happen fully, but let's say this was to have created a new low, then that's a trailed stop. That's what we manage it too. So it's uncertainty based on the alignment aspect, because what do you consider to be relevant based on the scenario that you're looking at, and what can kind of counteract that, and then which one makes more sense. And then that's kind of built on experience. Like you can build rules around it, but you could have a rule set where you want to buy every M1, M5 setup that's that favors the H1 direction, like let's say this H1 is bullish, I'm gonna try to buy every single M5 transition to the upside. But how does that change? Let's see, let this load. How does that then change if the daily, the weekly, and the monthly are not technically aligned? And I think that's things that people don't really look into, because your setup could be correct. You have an H1 and you have an M5 transition, and you aim for the H1, right? But does the result of this change if you have the daily, weekly, and monthly not aligned with that? Or let's say the setup that does win, it does have. Let's look at it now. All right, let's say okay, so they're all bullish. So the H1 is aligned, and then the daily, weekly, monthly are bullish. But how does that vary if let's say the weekly was bearish? Do you have a scenario where that even happens? You know what I mean? That's the tough part with trying to memorize these types of alignment combinations, because there's just too much to try to interpret over time. That's why it kind of takes a long time to build the intuition, the experience for it. Does that make sense? Yeah, see, so that the problem is always going to be alignment. And level 1 is obviously studying because you're more than likely going to be able to solve it if you're able to look at the in between. Like if you're looking at, let's say, H1, H4, but you're taking trades off M5, M1, if you can then figure out the combinations of what happens when M15 and M30 are not necessarily aligned, or one of the two, then you could probably get the concept of alignment after that point. You know what I mean? But after that, it's like if then you're trying to expand that, then now you look at the external. Because this scenario is way different if the monthly is doing this, or if the monthly is doing this, or if the monthly is doing this. Oop. Does that make sense? So did I skip one? Yeah, I did. Okay, that's a good closure. If that closes that way, that's a good closure. Okay. Hey, did that not close that way? Where's that? Where's the candle? It didn't close this way, right? It closed down.
No, I think it closed that way. Maybe this one is 10 minutes and this one is 50 minutes.
Oh, that's why. Okay, never mind. That's good. This is not. Oh no, this is no. You're right here. You're actually right here because of this break. So this break would make me want to either hedge away, but the thing is like this is then the realignment aspect. But the POI is pretty big, but it still makes sense to then aim for that. You know what I mean?
Yeah.
And then there's more solutions to this. There's like it's a different problem to tackle then, because you could either take the whole POI, aim for like the 1 to 3, 1 to 4, or you could take partial position in that type of scenario and then look for M1 continuation, right? But that's a little bit more risky because you're exposing more risk. But yes, you got trailed, but then immediately got another setup. Okay, that's a sweep. So this would be yes. So this scenario has met its target. So if you see a transition here, it makes sense to go up, because
Yeah,
then it
this
would
is the
be
first day, the
yeah.
first trade that you saw.
Okay.
I took the sell and the buy.
Mm-hmm. See, this is good. And then the thing is, if you see this, you can still argue this is bearish. So it's only until you break that. And then here's where you want to find the transition.
Yeah, there was even a better entry after.
Mm-hmm. Like, let's say, I mean, that broke. This is then holding you together. Okay. Okay, that's good. That's good. That's fine. This, you can see here. Oh, you can see this internal disruption. That creates the new leg. That break of structure here. That's a good entry. And then you want to keep your stop here. That's fine. That's good. As long as you note this, that line there. If you zoom in, maybe M15, you're going to see how important that sweep is there. Okay, target was hit. Very nice there. And okay, this is good too because of the sweep, how quick it is, and you start to see the reaction. That's good. But it is like market's about to close in like 2 hours. That's the only bad thing. Sweep, break. This is now a bit confusing. You're kind of stuck. That I would. It's technically a bearish range, but it's still technically bullish. But I would maybe want to see the full break here because that means that then this failed. But yeah, let's see. Anything else, guys? Because I gotta head out here in a bit. Oh, okay. Someone took a screenshot. That's cool. All right, cool. Bitcoin daily. Okay. I don't know if I deleted it, but okay, that's good. Yeah. But yeah, guys. Think I gotta run here. I gotta go do some other stuff. But yeah, I think yeah, I'll see you guys next week. I do have to go unless you have some last questions. Cool, man. See you guys next week.